We are back, and today we take a deep dive looking at CIC Insurance. Who is CIC? Who is the management team, and what are the products that you have interacted with in the market? Let's take a look at the overview of CIC as a company. CIC is a micro insurance provider in Kenya, and it offers general insurance, group life, as well as individual life insurance services. In other words, you have interacted with CIC either through your medical or your motor insurance, or if you have a group life policy provided to you by your company, you've possibly have interacted with this company. And alternatively, if you have taken some policies such as education policies, most likely they have been provided by this company. Let's take a look at what else this company does in terms of the business segments. The business segments, there's general insurance, long-term insurance, and the non-insurance related businesses. I shall explain each in detail. General insurance is basically your medical as well as your motor insurance. If you have a car, by law, you are required to be able to insure it. Medical insurance, if you are employed, most likely you have a medical cover. In terms of the general insurance, those are the key business lines. And in terms of its market participation and positioning, CIC has 7% in terms of the premiums in this market. In other words, when you look at anything that is general, whether it's aviation, marine, whether it's medical or even motor insurance or even your home insurance, CIC tends to be 7% of that market. The ranking for this business is third. First, the largest firm in this business is Jubilee, which is at 8%, and CIC is actually second, not third. CIC is the second in terms of the largest market share, coming in at 7 percentage points. That's the general life. So the motor, the medical, if you're insuring your home products, matatu insurance, all of that has everything to do with the general insurance business. Long-term insurance business is your policies. So mostly your not your health policies, your life policies. If you take out a policy that insures you and ensures that your dependents get a payout at the unfortunate point in time when you have passed on, then that business is more or less done by CIC. General life is typically offered by corporates, but it's also increasing in terms of its attraction to individuals or entrepreneurs or people who are running their businesses. For this particular business line, CIC ranks third. For this business, it has a percentage market share of slightly above 6 percentage points. The dominant insurance company when it comes to the long-term insurance is Britam, which is at 35%, followed by Jubilee, and then CIC comes third in that ranking. When it comes to the other businesses which are non-insurance related, CIC actually has the largest fund when it comes to money market funds as well as unit trust. Money market funds, you have interacted with them if you have been putting money aside using the CIC platform or any other platform and putting money aside where you can be able to get it back sooner rather than later. This particular business line, as at half year of this year, was 31 billion. And they are dominant in the market space because the next player, Britam, has assets that are valued at 9 billion shillings. So you can see that huge differential that has actually been beneficial for CIC as a business. One of the interesting things that CIC has done, it has leveraged on technology to enhance its distribution and communication with its shareholders as well as with its customers. For instance, when it comes to the money market opportunity, where you're able to get opportunities to invest in fixed interest income, that yet this particular instrument gives you liquidity. For CIC, you just go to any Play Store, download the CIC Money Market app. It gives you access to a money market fund. It gives you access to the equity fund, which invests in equities on the NSE. It also gives you access to the balanced fund. The latest return we have seen for CIC for this particular fund is slightly above 9 percentage points. The seamlessness that it offers by offering you the distribution touch points over the phone has been beneficial in terms of helping them drive their market dominance in this particular space. So the key business lines, there is general insurance, there's long-term insurance, and there's also money market funds. But in general, in as much as it is dominant in the insurance space, number 2 ranking on general insurance, number 3 ranking on long-term insurance, and number 1 ranking on the money market fund, the insurance sector in general is just not an easy space. It's not profitable. The growth and the penetration rates there are very low. In total, of all the 50 million or so Kenyans who are in this country today, only 2.7% have actually had access to insurance products if you compare the premiums written to the GDP of Kenya. 2.7% is negligible. And the thing that has actually helped is the regulatory mandate that requires, first and foremost, that all cars are insured. Second thing that has been able to help is the medical insurance cover, which is a benefit extended to employees by the majority of the companies. 2.7% in terms of comparing all the insurance contracts written as a percentage of the GDP is very low. So anybody looking at this insurance sector has for the longest said that this number will possibly double or quadruple. That has been the mainstay in terms of investing in the insurance sector. But this has not come to be. 2011, 2010, when the market was sort of becoming vibrant and opening up to the foreign investors, up until 2014, the conversation was always, let's invest in this sector because at some point people have to insure more as the economy grows and the country becomes a developed country. But that has not been the state of the insurance sector. So it remains battled by a lot of fraudulent claims, especially when it comes to medical and motor insurance, which are the dominant asset classes when it comes to general insurance. And it's not a profitable company, it's not a profitable sector, neither are the rates of growth in terms of penetration and how many people have it growing. What are some of the trends we have seen in this sector? This company is in microinsurance. What we are beginning to see is companies that are using the mobile phone, using that to be able to enhance access and distribution points. So we have seen some agents in the economy come and say, don't come to offices, we don't even have offices, use the mobile phone to connect with us. That's something that this company is also spearheading it in terms of the industry. We have seen certain changes when it comes to the management. So recently, in the first half of the year, Mr. Patrick Nyaga joined this company as the Group Chief Executive Officer. Mr. Nyaga is no foreigner to CIC, which is 24% owned by Cooperative Bank. Mr. Patrick Nyaga was formerly the Chief Finance Officer for Cooperative Bank. He was the CFO for Cooperative Bank, and he is familiar with the CIC group operations because CIC was a subsidiary that was reported under the Cooperative Bank group. He joined the helm of this company in the first half of 2020, and his mandate is just to amalgamate the operations of this company and help it and steer it towards profitability. We have Mr. Moyese Lovai, who is the Group Chief Finance Officer. How are the finances for this company looking like? If we take a look at what they have generated in terms of the total income, which is the subsequent slide to this, there's actually been a downside in terms of the growth on a year-to-year basis. Our team will put up the next slide so that we can be able to talk through that. So we have the products there. Okay, general insurance, life insurance, health insurance, asset management, as well as CIC pensions. These are the broad products. Let's see if we can have a glimpse in terms of how their finances look like. Okay, subsidiaries of the company, again there. CIC Life Insurance Limited. Then there's a general insurance and there's an asset management business. Let's see what comes up next. We have the finances there. That's the CIC revenues. So there has been a downward trend on revenues as was expected. With the closure of COVID-19, there was muted movement in terms of cars. People were not able to access hospital care, so there was a downward trajectory on medical insurance. This had an impact on the CIC revenues, where if you compare what the revenues were in June 2019, they had total income from their investments as well as their core operations of 8.7 billion. And as at 30th of July, the year 2020, this had dropped by almost 500 million to 8.3 billion. Of course, this had a negative impact on their profits because their profits remained steady. You couldn't keep the lights off. You still had your lights on, and they had to cater for their expenses. How did this then translate to the income after tax? There was a huge material fall in the income after tax. In June 2019, the income that this company was able to generate was only 20 million. This changes in the next slide. Once it comes up, we will be able to elaborate what was happening there. 20 million is the amount of money they generated in 2019, minus 335 is the loss that they reported in 2020. Now, the issue with this company is you have a company that's reporting profits that are here, 8.7 billion in 2019, 8.3 billion in June 2020, yet the profits for 2019 are 20 million in 2019 and a loss of 335 million in the year 2020. There's a lot of expenses that are going through, and the expense ratio, which is the key ratio you look out for when you are looking at an insurance company, is pretty high. So the mandate for the new executive team, more specifically the Chief Executive Officer, Mr. Patrick Nyaga, is to see how can you actually manage the number of expense items so that you can be able to enhance the outlook of this company when it comes to profitability. If he's able to achieve this fit, then we will be looking at a company that is able to turn profitable, because when you look at its market share, whether it's in the general life or the non-life business, then you are seeing that it's a company that's top number 3 out of all the companies that are offering insurance products in Kenya, and there's just no reason why they cannot be able to change this 20 million into something even higher. That's the key mandate that the current Chief Executive Officer has been given by the current board, as well as the expectation from the shareholders. When a company has a negative position when it comes to the net income, then it has a negative price to earnings ratio, because you're typically saying this loss divided by the number of outstanding shares, what does it translate to? The loss per share. When you compare the price to this, it's going to be negative because you're comparing a positive and a negative. The next slide shows us what is going on when it comes to the number of shares that are listed in this company, and that's 2,615,000,000. That's the number of shares that are available on the NSE. What we have looked at is the fundamental analysis of CIC as a company. What does CIC do? What is its market positioning? It's top in class in both its insurance businesses as well as asset management businesses. Its revenues have not grown as expected, but the key red flag here is, why is this company then not able to churn a profit? It means that there are actually expenses that are going through, and some of these expenses are just highly affiliated to the insurance business that it does. That's the fundamental analysis, where there is a red flag and you're trying to see, can the current management team turn the red flag into an orange flag, which would possibly turn into a green flag? And if you start seeing that movement, then you want to pay attention to it. The technical analysis involves looking at the price trajectory on the NSE. Now, it is trading at a negative PE ratio because of the last reported earnings, which were minus 335 million loss over the last period, that was 20th of June. CIC, however, tends to be one of those penny stocks that retail investors are always looking out for. The sentiment there is, let the price go up a little bit, 20 percentage point from the low base makes sense. And it tends to be purely speculative, nothing linked to its operations. But here's an interesting perspective. If you multiply the outstanding shares times the price, you get a market capitalization, which is the total value of the company, of 6.7 billion shillings. So the current price multiplied by the number of shares gives you a total market cap of 6.7 billion. When you look at 6.7 billion and compare it to the assets that this company holds, in other words, the net book value is slightly above 7 billion. In other words, this company is trading at a discount to its book value. That already would typically tell you that there is some value in this company, and especially given the fact that we have seen some insurance transactions go into the market, more specifically Jubilee Insurance, that sold one of its businesses, part of its general insurance business, for 1.95 times book value. If you look at that, then you're asking yourself, this company that's generating revenue, this company that's number 2 or number 3, depending on the market segment you are looking at, This company that is able to have proper distribution mechanism and has leverage on technology, then what needs to happen to actually move the profitability from a negative to a positive? And can the management team be able to deliver that? Because today it is trading at a discount to its book value, the assets that it's holding in its particular books. And on a long-term basis, that could possibly offer you a long-term opportunity to buy this stock. That's more of a speculative, technical angle that you are trying to look at. But your point of caution has to be this. Ultimately, you only make money from a stock in two ways. You either buy low and sell high, or you buy the stock and hope to be paid a dividend. These dividends come from the earnings. The likelihood of earning a dividend? Highly unlikely for a company that has just reported a 300 million loss just for 6 months. If you extrapolate that, that could easily translate to anything between 600 to 700 million loss. So the likelihood of being paid a dividend, that's negligible. So that is unlikely. Second reason you'd possibly be buying it is imagining that it will move from its current price to a higher price. It tends to be highly speculative. The retail investors are looking at it. Not too much happens in terms of material volumes, though we have seen that the previous CEO, Mr. Gitogot, had actually sold out his stake. So unless the managers are buying or selling or it's cooperative bank, you don't tend to see a lot of investment activity on this stock. So really, what we are saying is it has a good business model, but if you want to buy it for a long-term basis, then there is an opportunity to follow the company and see what will the current executive team do differently so that you can move from the red in profitability to orange to green. And once you start seeing the company going to the green, then it is an interesting company to look out for in the long term. For now, if you are trading it on a speculative basis, pay caution, pay attention to what you are trading in terms of demand and supply, because the fundamentals might not necessarily be reflected in the price. Was this information helpful? Do you have additional questions on CIC? Please feel free to ask us. You have our SMS line there, 20146. You could also reach out to me, that's at Mbithemwema, on Twitter, Instagram, or Facebook, or you could reach out to us at Metropole TV, that's Twitter, Instagram, or Facebook. I look forward to hearing your engagements, your sentiments, and alternatively, what do you think? Why would you buy CIC? Why would you sell CIC? Why do you even care for CIC? I hope to hear your voice in that. We take a short break. When we come back, our team was able to go to the streets of Nairobi and ask people, what do you want to know about investments? We come back with those questions and I will be able to sit in and answer them. If you'd like to be part of us, please just reach out to us and tell us, and we would like to extend that invitation to you. For now, we take a break. When we come back, we take it to the streets.